Financial statement disclosures are very important to the users of the financial statements because it holds valuable information that is not presented on the face of the financial statements. There are multiple reasons behind why this information is not on the face of these financial statements. One of the reasons is it's just excess information. They'll put the main number on that you'll use to calculate, for instance, net income or assets or liabilities. But then they show in the disclosures how they got that number, like with inventory. With US GAAP, you're allowed to use either FIFO or LIFO, but it's not stated in the on the face of the financial statements inventory FIFO and then the number. They just put inventory. So, as a user of the financial statements, you need to be able to go and look up in the disclosures and find whether that company uses FIFO or LIFO. You need to know this so that when you're comparing other firms in a particular industry, you know which firm is using FIFO and which firm is using LIFO, and go back and calculate them using the same measure or method so that you can make a more accurate comparison between the two. Also, there are things that aren't on the financial statement at all, like certain types of leases. Those are not required to be put on the financial statements, but it's really important for users to know if a company has half of their assets they're going to have to pay on a certain lease by the end of the year. Also, you need to know if they're going to have access to a certain asset for however long they have access under the terms of the lease. Also, however long or however much they're going to have to pay out every single year, since those numbers aren't required to be on the lease or on the front of the financial statements. Also, sometimes the reason why they don't put certain things on the front face of the financial statements is because there's not a way to measure the total liability or asset or whatever the title the account is under. They may not be able to calculate the total, so they'll just put an estimate on in a disclosure, so that way they may not know a specific amount, but they can give the users a good range. So as you can see, there are many reasons why disclosures are very necessary for financial statements.